Hello everyone, I'm going to show you guys how to trade the 2022 model live. You can see that I am currently in a trade 1 contract on the E-mini NASDAQ. I'm looking for this level of buy side to get hit above the market price at around 16,872. You can see that I did buy down here in this fair value gap. I'm just going to be walking you guys through kind of like the step-by-step process that I go through to find these setups. So if we go to the 1 hour time frame, you can see that price was above this level of buy side liquidity. So when price is above buy side, I'm not taking that first model that appears above buy side unless I have like a really strong bias that price is going to head higher. This isn't really an area where I want to hunt for setups. Order flow has been bullish. Notice how these bullish PD arrays are acting as support for the market. So it returns back down to this bullish fair value gap. It's bouncing off of them. It's returning back to a fair value gap on a lower time frame here, returns back down to a 30-minute order block over here. So it's just constantly giving feedback that price is in a buy program. Bullish PD arrays are being respected. Down close candles are being supported. We have that again right over here. This order block gets respected, price expands away from it. So I'm using that same logic that price is still in a buy program. And what I did is I marked out this level of sell side liquidity. So we had these relative equal lows right in here. If we go down to a 15-minute time frame, it does look a little bit more clear. We have these relative equal lows. Then we have this low down here. Now I'm not waiting for this low to get rammed just because there's still some distance between it. We still have around 30 points between this low to this low. And really what I'm waiting for is I'm waiting to see, okay, at 9:30, do we get a Judas swing? ICT teaches this in the 2022 mentorship. Do we get a direction opposite of that order flow to basically trigger sell stops into the market so smart money can buy those sell stops? So at 9:30, that's kind of what I'm hunting for. Going down to a 5-minute time frame, if we look when 9:30 opens, that is right around here. Once we get this volatility up, price trades higher, but then it drops lower, sweeping out the relative equal lows. This is when I can go on to a 1-minute time frame. Now, using that idea that price has been in a overall buy program, I still believe that NQ has higher up to go on the higher time frame. I'm waiting for it to return back to significant liquidity on the 5 or 15-minute plus. Right, I'm not just using some minor swing low. Before we continue, if you guys are interested in seeing more content from me, I do post where I believe price is drawing towards in my Discord. So this was at 10:10 a.m. I alerted Discord members that I think price is going to run for the buy side liquidity. So we have a change in the state delivery, which is bullish. Another thing is, if you guys are interested in learning ICT concepts, I'm running a 7-day video series where each day for 7 days, I'm releasing a video showing how to trade ICT concepts from beginner to advanced. And I'm also uncovering my personal trade model. We have another video coming out at 11:50 a.m. today. So if you guys are interested in that, you can check out that first link down below. So a big mistake that ICT traders make is they look for the 2022 model, but they're counting this as the run on liquidity. And ICT teaches in his breaker lesson that the highest form of breakers form when price runs 2 pools of liquidity. So I've utilized that same logic into the 2022 model. So we're waiting for the sell stops to get ran right here. Once those sell stops get ran, right, that's the first pool of liquidity. If we look over here, notice how price trades higher. Using that breaker logic, price makes a low, a high, a lower low, then it makes a higher high. So notice how it runs that second pool liquidity by taking out this previous low down here. Now you notice I did take off right here. That was on accident. I meant to set a limit order for this high right here. So sometimes that happens obviously, but it doesn't matter because there's plenty of setups that are going to form in the future. Once we get this, a break above this level right here, this is a market structure shift. And we look for a fair value gap within that price leg. So we have the fair value gap right in here. So you can see that I don't get filled in the fair value gap, but I get filled in close proximity to that fair value gap. So sometimes I don't always require it to be in the fair value gap, because if we take a look, I'm going to drag over an RR tool. You could see that if I get filled right here, my RR is still pretty good if my stop is beneath this low. So if I'm targeting this high, and my stop is beneath candle number 1 of the fair value gap, well, the RR is good enough. I don't have to wait for it to trade into the fair value gap. So it returns into it, expands away from this, and this is a little unicorn model right here. You can see that price returns into the bullish breaker as well. So this is a unicorn when we have a fair value gap and a breaker overlapping. So that's the trade framework here. You can see that it is expanding towards these relative equal highs. Dan, why not take off at this high? Why not take off all at that high? Well, since we have the relative equal highs above, and price it has expanded towards that. Notice how it set this high, which is relatively close to these ones. So now there's going to be loads of buy stops because we have these cluster of highs right in here. So really what I'm looking for is I'm looking for price to draw up into that 16,872 level. You may say, why did you trail your stop? Well, when price reaches about 70 to 75% towards the draw in liquidity, this is a gem that you want to write down. So if I draw a fib from this swing high to this swing low, and I mark out the 75% point, when price gets towards that 75% point, I like to trail my stop to break even. Not always, but in this case, since there is relative equal highs above, it's already gone 75% towards that draw in liquidity, which is the buy stops above old highs. I don't want to allow price to come all the way back down and stop me out, because at this point we should just see speed into the buy side. I'm not looking for a large retracement all the way back down to a discount. If we were to get something like that, chances are I have the wrong draw in liquidity, so I'm not anticipating for that. So when I see these relative equal highs in here, retail is thinking that's resistance. I'm looking at it as the algo selling the idea that it's resistance to get retail to put their buy stops above here. So you can see it is expanding into that now. At this point, I wouldn't want to see it return back to this fair value gap low. There we go. It just got filled. So I'm going to show you guys the execution labels. Again, this should not have been taken off so early. You can see that it was taken off right there. That was meant to be taken off right here as a first partial. So that's going to be it for this video. If you guys want to continue to see more videos like this, make sure you let me know down in the comment section down below. Have a good one.